rest, and that is the conversation we've been having here. But for time reasons, now you let me get the conversation back to the studios.
Thank you so much, Ivan Kewadanjolo. The weather definitely looks nice in Entebbe, and the promise for proprietors in the line of hospitality and what hopes they see ahead of Entebbe being formalized and operationalized as a city. Bringing the conversations back in studio, we look at the central result in banking theory that is for banks to have the incentive to provide an efficient level of services. Now it is necessary for them to actually retain a part of the loans that they do originate. Now, when you look at banks, they do provide unique services in the form of publicly unobservable screening and monitoring of borrowers. However, we traverse this discussion and look at the dynamics of getting a loan, especially with the evolution that has come in financing. There's so many other alternatives to financing or funding for that project that you have, that business, that idea, and it all comes down to sustainability. So are the banks offering sustainability, or what are the other alternatives where you can be able to look at sustainability when you are acquiring a loan? We do have Anekama Financial Services to have this discussion with us. Their financial expert Arnold Katongole joins us. Good morning, Arnold.
Good morning.
How are you?
I'm fine.
Okay, so let's get into the nitty-gritty of it. When we talk about someone getting a financial service, it comes down to one thing: how legitimate is this financial service they're getting? How legitimate is this loan? What are some of the things that they have to tick off when they are looking for a financial institution to get this loan from?
Thank you so much. Before I can look at the legitimacy of how a client can identify whether a financial institution is legitimate or not, there are 4 categories of financial institutions, what others call tiers. We have tier 1, tier 2, tier 3, and tier 4. Now, tier 1, these are commercial banks. And tier 2, the commercial banks I'm talking about, we can look at banks like Centenary, DFCU, etc. Now, tier 2, they are called credit institutions. The credit institutions, we may talk about Opportunity, ABC Capital Bank, Black Bank, etc. Now, the tier 3, they are microfinance institutions, which normally are referred to as MDIs, micro deposit taking institutions. Now, from tier 1 up to tier 3, all those institutions are licensed and supervised by Bank of Uganda. Now we come to tier 4. Tier 4, these are institutions or microfinance institutions and money lenders which are supervised and licensed by UMRA, Uganda Microfinance Regulatory Authority. Now, under tier 4, we have institutions like money lenders, we have institutions like SACCOs, we have institutions like microfinance institutions. Remember, in tier 3, we have MDIs, micro deposit taking institutions. Now in tier 4 we have NDT, non-deposit taking institutions. So all those institutions under tier 4, the money lenders, the NDTs, the SACCOs, are supervised by UMRA, Uganda Microfinance Regulatory Authority. Okay. Well, now back to the point. If someone is going to identify whether a financial institution is legitimate or not, he has to know whether this institution is supervised and licensed by either Bank of Uganda or Uganda Microfinance Regulatory Authority. Okay. So if this institution is neither supervised by Bank of Uganda nor supervised by UMRA, it is not legitimate. So you have to think twice. Okay. Secondly, this institution must be having a registered office or a registered place of work or physical address. You don't have to transact with an institution which is working on you on the streets, in someone's home, and when you ask them to come to their offices, they are not straightforward. So that is another indicator that this institution may not be legitimate or not. So they have to be with a physical office, because those institutions, the UMRA and Bank of Uganda, before they give you license, they have to come and supervise your place of work. Okay. Number 3, you have to look at the documents you are signing before taking up a loan. Some institutions go ahead to make clients sign land sales agreement, or they transfer people's properties into their names. So you have to look at the documents. The documents should be loan agreements, not sales agreement. You should not sell your property to this financial institution, but you just pledge right?
Yes.
So even in these loan documents, the loan amount, the interest rates, the loan period, the collateral pledged should be well spelled.
You speak of documents. What are those specific documents and considerations that are involved in applying for loans, especially for various purposes, especially business startups or refinancing?
Thank you. The documents you have, first of all, you have identification documents. When I talk about identification document, I mean documents like copy of the national ID, copy of driver's license, copy of the passport. I talk about trading license, rental receipts in case someone is applying for a business loan. I talk about employment documents in case someone is applying for a salary loan. Those are some of the bank statements. Those are some of identification documents. Then we talk about collateral documents. Collateral documents, I mean things which identify the security or the collateral that you are pledging to a financial institution before getting a loan. Things like certificate of title, things like a logbook, things like land sales agreement, things like a certificate of fixed deposit in case you are taking a loan covered by fixed deposit or what other institution call cash cover loans. Those are the documents we look at. Okay. Then we look at passport photos, we look at tax clearance certificate, we look at the registration documents for a company in case a company is applying for the loan. Registration documents here, I mean company form 20, company form 18, certificate of incorporation. Of late they're asking for beneficiaries form. Those are some of the documents as different financial institutions. But these documents vary from loan type even to the certain institution, because what Anekama may ask may not be the same as Centenary is asking. Yeah,
all right. As a financial expert, when it comes to eligibility of loans, people do default. I know that you have experienced that day in, day out. And so financial institutions have had to modify some of their terms and conditions of acquiring or giving out these loan services to the public because of the defaulting element. And what are the present time's consequences to defaulting in loans, and how can people actually manage their loans so that they don't end up in the defaulting section, which will end up having them lose their property pretty much?
True. Thank you for that. Now, some of the consequences which may affect you as a result of defaulting, one is loss of property. If I pledge in my matrimonial home, my vehicle, my motorcycle, my land farm, and I don't pay, I default, the financial institution is likely to liquidate this asset to recover the loan. Two, reputation. Your reputation will be affected negatively because these financial institutions, they will go on as far as advertising your matrimonial home in press. They can bring debt collectors and write on your home, property for sale, bank property for sale. Just imagine the image, the perception the neighbors, the friends, the family is perceiving because your house is written on property for sale. Then another point is creditworthiness will be affected negatively. If I default in Anekama Financial Services and I want to go to Centenary to apply for the loan, Centenary will not be willing to give me the loan because I have ever defaulted in Anekama Financial Services. Okay. Yeah, true.
All right. Arnold, as we have a conclusion to this conversation, loans are not bad. They are good.
Yeah, they
What's
are
your encouragement as a financial expert?
What I'm encouraging viewers and all Ugandans out there is let them take loans which are within their limits. Because when you take a loan within your limit, you are able to pay back. And when you pay back very well, the other financial institution will give you more money and they will advise you. And let them first identify the legitimate financial institutions and look out for those institutions to get the services from there, like Anekama and etc. and etc.
All right, Arnold Katongole, thank you so much from Anekama Financial Services, a finance expert. And of course, you do need more advice in that capacity, you can reach out to them across their social media platforms. As we sign out of the 23rd edition of Morning at NTV this September, we do have a birthday baby in the house. And so birthday wishes going out to Mariam Juma. Best wishes are coming in from the Angel, and they are saying that you mean the world to them. them as a sister. They pray that the Lord blesses your life with all that is good and beautiful. Her prayers to you that God helps you fulfill all your dreams and aspirations. Happy birthday to you from Joy, Aggie, Abdul, Andil, and Daddy Andrel. Love you. That's the message that's coming in from your friends and family. Madame Jima, happy birthday to you. That brings us to the end of Morning at NTV. Thank you so much for having been with us for this edition. Have yourselves a good day.